Hey guys, what is going on? I'm my stinky tank top. It is Yo Mama 5065 for another video, man. And I'm back making another video, man. And in this one, man, we're gonna be talking about it real quick. I'm recording on the iPhone 13, man. I did some things. I made a trade, man. Traded my mom's headphones for iPhone 13. She was not happy with me, but she didn't like get on me too bad. I had to, because man, it was an iPhone 13, man. But I felt so bad after y'all just seen it. I was like, had like a pouty face because she didn't have any headphones anymore. But it's all right, man. I'm gonna try to make the money back, man. I'm gonna try to flip it, man. You guys know Facebook Marketplace hustle, man. If you don't know, man, get on it, make you some money, man. Quick exits, quick contracts, man. You know, with Facebook Marketplace, you can sell your things with the LLC because they have a licensing to have transactions going on through their thing. So just beware of scams and stuff like that too. Either don't do business with unimportant people. I mean, it's pretty simple. With that being said, man, let's talk about the expectations of when people hand you down information. You don't really understand that, yes, some grade of knowledge is required. Like, you gotta know, about certain things. Like, I'm just sitting here and I'm like, dude, what would make my analogy of the theory of trading so right that I would not be able to kind of go against it? And my analogy was the fact that it comes with being able to understand that if you also have the calculations for the slippage in mind too, then you'll be straight. And what I mean by slippage, I won't use the word slippage. It's such a slurry word. I would like to say that if you have the money and the calculations in order to understand fractionally how price will be disturbed, or how price will kind of hesitate to, or simply how price just simply, behaves in that situation of getting ready to kind of look at liquidity and either takes it and repurposes it, or it kind of goes where it kind of just fills a fair value gap, and it kind of knows where good orders are put, and it kind of respects those orders because it wants those people, those investors, to not be stopped out at these low dollar prices, because you can simply take those low dollar prices, essentially turn a percentage of your risk even into profits. I'm seeing 70%, 80%, 20%, 500%, 500+% return on the percentage of your risk being risked to these amounts of percentages on the risk itself, not on the account, but on the risk itself. And I was sitting here thinking, like, maybe these guys aren't out to get me. Like, maybe these guys do know what they're talking about. Like, maybe these guys do know, what it means to kind of be profitable in the market. But we don't have some of the calculations. Some of the things that kind of would throw us off is not having um, the calculations right. As far as, you know, understanding that, yes, you cannot control the market, but it's not about controlling the market. It's about kind of agreeing with, the uh, 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 well-being of the trust that you have to have with these, market makers in order to understand that when making a decision, it comes from the knowing of people who profit, grow businesses, and businesses grow credit, and credit grows development, and so forth. And I think once you understand that, you can understand the linear relationship between the exponential type function that you can create almost, or exponential type neural network you can create, and the regimen you can expect to uh, uh, involve yourself in once you understand that. And once you do, you will understand that once people kind of deal in and they form these contracts and they form these expectancies of wanting to have more new projects or wanting to have more development, or just simply, wanting to, like I said, do something creative with the money. Even, you come to this place where, hey, well, at 50 cents, I'm gonna throw in an order here. Let's kind of like, respect each other's order, and respect the fact that, 50 cents on a contract could make you a lot of money, especially if you'd be willing to kind of develop that way and work that way. So if you understand that price fluctuating is going to fluctuate, at least maybe, per se, $30, or let's just say even $12, in the opposite direction before you get into your trade, because, let's just say $13, that is roughly over 10%. Let's just think about leverage and things like that. If we have these things that are calculated to respect the calculations of why we would give leverage to someone anyway, would give you an ultimatum to say, okay, well, if leverage is a thing, then maybe we don't want to risk more than 10, 20, 30, 40, 50, 100% of the initial IPO investment of our investors. So why not contract that, hey, documented CFTC, things like that, commitment traders, we will contract agree that prices won't go below per se $2.75, and or let's just say price won't go below 50 cents from our initial IPO of like 125. And so if you do the calculations there, you can understand that if you have enough money to understand that if you have way much more money So let's just say $1.50 multiplied by 1,000 is gonna be like roughly 12.50, 12.75. And I know it's not perfect, but somewhere around there, 12.75, 13.75 maybe. And if you have that amount and you understand that when you have let's see, and so when you have 13.75 and you fucking give me a minute, and you allow the price not to go below zero. I mean, at below 150. Let's just say, you know, you got like, let's see, 1,000 shares, so 12.75, 12.75, and let's see, 12.75. And let's just say you have $5,000 to $10,000 in your account, right? So, and the slippage, like I said, we contracted at like 50 cents. So, you know, price isn't gonna go lower than 50 cents. So that slippage is roughly about like $1 and $1 of slippage per share. So let's just say, like I said, you have $5. But if the price lines up to where, yes, we are allowed to say we're going to stay above 50 cents per share, but the let's just say the supply area created a pattern, a good pattern. Had, let's just say we got like a triple bottom right at $1.25, and then at like $1.26 we came back and wicked it on the 4 hour, wicked it on the 1 hour. You know, dailies looking bullish. All this monthlies got a candle that has fair value gap on the bullish side. And I mean, we're just oversold. We're just oversold. And let's say well, yeah, well, yeah, let's not say oversold, but let's just say we're in an area where people would want to invest in this. And, you know, we got like new 3D printer gauge or something like that people are gonna, you know, want. And the price sets up at like $1.25. So $1.25, you're in with 1,000 shares. $1.25 goes down to but instead of going down to 50 cents, it goes down to like $1 per share. So you only lose 25 cents per share. So 0.25 times 1,000, do that math, but you have 5,000 in your account. That's still only a percentage of your risk. So you see, if that situation, which it kind of does, it really does, because that's the name of the game when you want to develop, and or if, you know, you want to understand supply and demand, you put that in your mind. And I was thinking about this, and I was like, well, if I think about it like that, then there is really no reason for me to not really understand or not kind of believe in it now, because why would I not believe in it? You know what I mean? Type of thing. So it's just like, you got to do the math and you got to do the calculations. That is what shows you that. So that's that. I would probably name this video why slippage is important, and why calculating your slippage is important. So just think about it like that. And then just to like continue this conversation, what was going on in my head, it was like, man, like I was like, man, like I can't trust anybody with the investments or whatever. Like I can't trust anybody. I can't trust the fact that, you know, people will not kind of trust me when it goes to the fact of like, oh snap, like, you know, we got, you know, an investment here, whatever, and you know, we you know, want to deal with this or whatever, and but we don't understand that it can be calculated if you know about the math. Peace.